Mortgage deposits is often a question I keep getting asked about, especially after mortgage in principle is received. So today I'm going to spend a little bit of time going through a few of the different mortgage deposit options when buying a house in Scotland. I'm going to be covering off what happens if you're buying above or below home report value, or what happens when you buy at home report value as well. Genuine bargain price, and giving you a little bit of information about what that is and how you can buy a house at a discount and use that money towards your deposit. Covering off using a gifted deposit from family and friends. And then before we finish off, I'll go through a little bit about the new build gifted deposits and how that works. So stay tuned for the full video to find out about how deposit options can impact your mortgage. So first up, we're going to be talking about what happens if you're buying above the home report value in Scotland. This is something that was quite common during the pandemic, and it still happens quite frequently where houses that are maybe worth 100,000 are selling for 105. So it's important to understand what happens with that extra money that's above the value of the property. So let's say, for example, in that scenario, you buy the property at 105,000 and you're planning to put down your 5% deposit. Your total deposit in that scenario would be £10,000. The reason that it's £10,000 is your deposit is going to be based on the value of the property. Then with you buying it above the value, you pay that extra £5,000 on top of your deposit. And that's giving you your 95 grand loan with the 5% deposit based in the value of 100,000, with you paying that extra £5,000. So it all seems fairly complex, but when you break it down, you can understand why the banks do it and why they want to make sure that you're not contributing, that you are contributing the 5% to the value of the property. And if you're taking the risk buying it more than what they believe or what the valuer believes it's worth, then that's you that's taking that risk. On the flip side of that, if you're buying below the value of the property, you could then think that if you're buying it for, say, 95, that same property for 95,000, and it's worth 100,000, that you could use that £5,000 towards your deposit. It doesn't work like that, unfortunately. So the way that the banks are taking the view on that is that you still need to put down your 5% deposit. So if you buy it for 95, your 5% deposit would then be based in the 95,000. But what you do get is the benefit when you go to remortgage, because the value of the house doesn't change, just how much you're paying for it. And then you would get the value of it at that stage, and potentially you would look to get a higher loan to value at that time. And if you're buying at home report value, fairly straightforward. If you're buying that house for 100,000 and it's worth 100,000 with a 5% deposit, your deposit is 5 grand. So fairly straightforward. There are some exceptions to this rule, and one of these exceptions is called the genuine bargain price. So if you've never heard of this, essentially what it means is there's a genuine reason for you to get a discount on the property. And usually these genuine reasons can be buying from a landlord or buying from a family member. So let's say, for talking sake, you're buying this property that's worth 100,000 that you've been living in for the last 2 or 3 years. You've been renting it in the open market, and you've been renting it from a landlord, and they're selling you it for 95,000. You can then use that £5,000 to contribute towards your deposit. So in those scenarios, it's fine. And the same if you're buying from a family member, you can also do the same. If you're not, and you're not buying from a family member, and you're not buying from a landlord, there are a few other options that you can consider. So things like, if you don't have one, I would certainly suggest getting your lifetime ISA set up, or at least looking into it and seeing if you can benefit from it. There's rules and regulations around it, so just before opening it, make sure that you're going to be able to use it and benefit from it. But I would certainly suggest it to get that government boost. What you can also do, though, is if your family is in a position to help, you can get a gift from your family to contribute towards your deposit as well. And this is also happening quite frequently. So In this scenario, if you're living at home, or if you've been away at uni, or if you have been renting, your family can help gift you the deposit, and you can then use this deposit for the property. Just in the same way as the first three options, if you're buying it above, below, or at home report value, your family can gift you the deposit, just as if it's coming from cash from you, and then you can use that money to as your down payment and then buy the property. The same if it's a gift from friends, although the options are more limited in the market, not a lot of lenders out there like it if the gift isn't coming from parents, brothers or sisters, grandparents, but it is still an option. So if you are getting a gift from friends, although the options are reduced, it's certainly something that's possible. And it's actually quite popular as well. And it's something that I come across quite frequently, not as often as a gift from parents, but certainly more often than what you would expect to see it. And the final thing that I'm going to talk to you about is what happens when you're buying a new build and you're getting a deposit contribution. So what this means is, if say you're buying a new build, so you're not buying it for 100,000. So let's say, for example, you're buying it for 200, and the builder turns around to you and says, well, we'll give you 5% towards your deposit. What this means is, it means that you only need to come up with another 5% deposit, and you could buy that £200,000 house with 10 grand, 10 grand from you, 10 grand from the builder, and then you could buy it and your mortgage would be £180,000. Most lenders will cap this at 5%. So it means that if you do get a larger incentive, then most lenders would reduce the purchase price of the property in line with it. But typically a 5% deposit in these scenarios is fine. It's also important to understand that when buying new build, not all lenders will go up to 90% loan to value. So the options are limited. They're also limited to who would consider accepting the 5% gift from the lender, or sorry, from the builder, but it is certainly an option. So I hope you found this useful. If you do have any questions or comments, please leave them in the comments and I'll come back to you. And yeah, good luck for the property search. Cheers.